Hey, what's up, everybody? It is the afternoon keynote, first afternoon keynote, and I'm super excited about my next guest here. We we met actually in Tampa, Florida, very Unvalley place to meet, and I think you're gonna really enjoy some of his stories. He was employee one at WeWork, so he certainly has some stories to share, and he knows his stuff when it comes to community. Before I introduce our guest, though, wanted to make sure I just reminded you that there's a lot of opportunities to connect. Say hi in the chat. If you're here watching this keynote right now, just say hello. Let people know you're here. It's a great way to connect. Feel free to share your LinkedIn URL. That's a really great way for people to connect with you after the event or outside of the Unvalley hop-in experience, or maybe you're even watching on this live stream on LinkedIn or YouTube. Please share your favorite quotes from this session using the hashtag Unvalley. We'll be sure to retweet and comment on anything that you share so we can really help kind of spread the visibility of everything that's awesome that's going on in the community and at Unvalley. We've been connecting at roundtables all afternoon in the one-on-one networking and also in the expo. In particular, be sure to check out the free coding classes and cybersecurity courses from 1150. Those are happening later this week, so make sure you sign up for those if you have any interest whatsoever, which if you work in tech, I think you should probably be interested in those two things. But that's just me. All right. Huge shout out to our friends at FormStack. They are a versatile data management platform for any sized organization. We actually launched this community on FormStack over a decade ago. A really great community, remote first team, amazing culture. They've been remote first for over a decade. They're hiring for tons of roles. So reach out to Keegan Giles and the Powder Keg team, and he'll get you hooked up with an introduction. I also want to give a huge shout out to my alma mater, Kelley School of Business. They're a top 10 nationally ranked MBA program, and they have an amazing online MBA in particular. It's one of the best in the country, and they're accepting applications for next semester right now. So reach out to Ian Illig on the Powder Keg team for an intro. And last but not least, hey, our friends at Taft, they do all of our legal. They're one of the best legal firms helping tech companies from fundraising to exits. These folks are based in the Unvalley and Unvalley tech hubs around the country. Longtime partner of Powder Keg. So please reach out to me or Ian Illig on the Powder Keg team for an intro. So, going to introduce my guest here, Jesse Middleton. You're gonna love him. You know, he's the general partner at Flybridge Capital. He's a co-founder at the Community Fund. As I mentioned, he was employee number one at WeWork. So I'm sure we'll talk about that a little bit. But before I do, I would love to show you a little bit about what we've been building. So I put together just this 2-minute video overview of one of the aspects of our platform that we've built out. Would love to hear your feedback in the chat. Let me know you're here. I already see people. Courtney, Max, thanks for saying hello. Meg, I see you there too. Cool. Let us know you're here, and would love your feedback on what we're building. So quick little 2-minute demo, and then I'll introduce Jesse. Employers today have to compete for talent more than ever because of the mass adoption of remote work. These companies are struggling to build diverse talent pipelines, attract candidates beyond their local geography, and hire outside of internal networks. In a world with increased opportunity and competition, Powder Keg helps companies become known. When a user follows an employer's company profile, Powder Keg automatically sends a professionally written, personalized message to the user through the platform and via email. The message acts as a third-party endorsement by Powder Keg for the employer while also educating the user on the employer brand. The message might include a video provided by the employer, a quote, or a testimonial provided through the platform. Through an automated drip sequence, users get to know more and more about the employer's culture, product, and team. Over time, these users become what we call true fans of the employer. People who might want to join the team, share news, and even refer others to the company. The result of this true fans nurture sequence is higher quality candidates who stay engaged throughout the hiring process and actually have the potential to take companies to the next level. This also enables companies to recycle candidates they may have passed on previously, while also empowering their current team, customers, and partners to make effective referrals. Employers love that Powder Keg automates the nurturing process and that they're able to build a diverse talent pipeline by getting referrals from sources beyond their internal networks. Powder Keg promotes its corporate members as differentiated individuals. Many Powder Keg corporate members include links to their Powder Keg profiles and award badges in their website content, on their social media posts, and on their career pages. This kind of activity is creating a rising tide that lifts all ships for everyone in the powder keg community. To get your free company profile and learn more about building your 1,000 true fans to help you scale your company, send me an email at matt@powderkeg.com. We'll get you set up and get you plugged into this community. Jesse Middleton is the co-founder of WeWork Labs and is now a general partner at Flybridge Capital Partners. He's also the co-founder of the Community Fund VC and is doing a ton of stuff in the community space. One of the sharpest guys I know in the space of community-centric businesses. The Flybridge mission is to help their network of entrepreneurs leverage the power of community, and obviously we love that. So thanks so much for being here, Jesse. I know you've got a busy schedule and you're making time for us here in a very, very busy week. So thanks for being with Powder Keg Unvalley today.
Thank you, Matt. I appreciate it, man. When we got to chat in Tampa, it feels like an eternity now. I mean, we've been to so many in real life things. I live in New York, but I'm currently sitting in the Bay Area and in a hotel lobby. So as I talk to you, so we're like, I feel like we're somewhat back to reality and now the craziness of the market. So it's been a fun time, but I'm really thrilled to be here.
Well, we're obviously thrilled to have you because we're a very community-centric community, and a lot of people here in the community are eager to hear kind of what the latest is in the community industry or community-centric industry, but then also just the industry in general. As you mentioned, crazy stuff happening in the market right now. I know you're right at the center of it. Well, today you're in the Bay Area, but you're flying to all the major tech hubs, all the major capital hubs. And you've done a ton of work across the country in person. Just following your Twitter feed, it seems like you're everywhere right now, man, which is great. But you've got some big news. Let's start there. Let's start with the big news to share. Tell me a little bit about your biggest announcements lately.
So the biggest thing for us is we just announced this week. So this chat is perfect timing. We just announced our latest set of new funds. We closed them in the past week or so. Our new seed fund and our first opportunities vehicle. And for people that are less aware of sort of how venture capital works, we go out and raise a fund every few years. Our newest seed fund is significantly larger than the previous one. That doesn't mean that we're not investing early stage. In fact, half of my last years of investment have been in pre-seed companies. We're writing like $250,000, $500,000 checks to be in sort of that friends and family stage. But our larger funds do let us sort of write checks slightly bigger in that first round and want to be the first institutional investor in ambitious founders that leverage the power of community, as you mentioned. And I've lived and breathed this my entire career through WeWork and the co-working ecosystem into venture. How does community drive growth? How does it drive retention? How does it drive better product development? My partners have done this in the open source software world. And so we're excited to have the new seed fund to continue to invest. I think we've already invested in 8 companies out of that new fund in just the last few weeks, maybe the last couple of months. Don't hold me to that timeline. I think we started a little early. But the second big thing is our first opportunities vehicle, and that is an investment vehicle to invest later stage in our portfolio. So we have about 400 companies across our network funds, our main funds, and we get to invest at their Series C, Series D, and Series B rounds. And our first investment just came out of there in one of my portfolio companies called Chief. We invested in their Series B along with Capital G, Google's growth arm. And so super excited about Carolyn and Lindsay. For the purpose of this call, Chief is a community of female leaders around the country, 12,000 and counting, all VP level and above. And so fits squarely in our thesis. We think the founders are incredible. And so we get to invest. And that's sort of the headline for me is we get to invest for the next few years, even with the craziness of the markets. And the second big announcement, which I'm only going to half share today because she's not ready to have her name out there, but we did bring on our new head of community, which I know I talked to you about when I saw you in Tampa that we wanted to hire this role. And so somebody to really lean in and work with our hundreds of founders and thousands of entrepreneurs that kind of surround us over the coming 5 to 10 years. So excited to start to build more programming, do more of this content work with people like yourself, but also to provide support to our portfolio.
Oh my gosh, that's a lot of announcements, man. I'm very excited for you and all the things that are happening, not just for you, but the community industry as a whole. I love that that community is an industry now. It really does seem like
big industry.
Yeah, especially with companies like Chief that you mentioned. I mean, probably one of the biggest valuations that I can think of a company where the community is the product, really, at Chief, right?
Yeah, no, that's absolutely right.
Can you talk to me a little bit about that? Because it seems like they were really bleeding edge when they launched that company. And I mean, still are, obviously, just being one of the largest companies doing community as a product. But what do you
Yeah,
think resonated about that?
I think there's a couple things that happened. We co-led their seed round, only about, boy, it's only been like 4 years. It's been crazy to think about this. When we did that round, they had a pitch deck and about 40 women's photos on it that they had talked to and an idea. And funny side story, but when we signed the deal, we decided to invest. It was one of the fastest decisions I've ever made. You could see it in Carolyn and Lindsay, the two founders. They had lived and breathed this problem set. They had thought deeply about what this community needed, and I think what really resonated was this was an audience, 5 million women and counting, just in the U.S., who are VP level and above, who had traditionally been overlooked in their jobs. And this, we all know, the glass ceiling. These are real problems. These are systemic problems. These have been problems for decades, and they're not going away without really focused change. But they had also been overlooked in the organizations that supported other leaders. So groups like YPO focus on CEOs and founders of massive companies. Well, here's the problem. If very few women are getting venture dollars, very few women are in those leadership roles, then very few women qualify for those organizations that specifically require to be in a leadership role or have venture dollars. And so I think part of what works when you're developing a community, like a community minded product, community focused product, is there needs to be a connection that your customers feel to the brand and the mission that goes far beyond the product. This is not the moat that Chief has built, are the people who feel connected to Chief. And I laugh about this because one of the things we talk about in open source software is the laptop sticker test, and whether or not your product is good enough that people want to put your brand on their laptop. And I'm sure we all have done this with our own companies that we worked for. But you walk around, I'm in San Francisco right now, you sit in a coffee shop and you see the back of everyone's laptop is filled with stickers of GitLab and GitHub and MongoDB. Chief has this, but they have it on LinkedIn. So every time I want to go find an employee of Chief and I search LinkedIn, I say, VP of sales at Chief, I see like 1,000 people's names. We are not 1,000-person company, but people feel so connected to the brand that they list it as a part of their professional persona. They're a Chief founding member of a market, they're a Chief member. And so I believe that it's a combination of sort of content and service, but predominantly the people that are there are what made others step up and say, wait a minute, this is a program that might be good for me. Now, once you have those people, just to be clear, you still have to build an amazing product and offering. People won't just stick around for the cocktail hour, the happy hour, and the fun times. They want real support. And so Chief core groups provide that. But I do think that when we backed them originally, the idea was still the same. It was, how do we enable these women to be better leaders and grow in their professional lives, which bleeds into their personal. And they've continued to do this for tens of thousands of women since. And I mentioned at the top of this that I tell a very small side story, but when they came and pitched us and we signed the term sheet, Carolyn shared the floor plan of the first Chief Clubhouse. And I immediately said, I know where that building is. Not only that, I know that floor. That was actually Adam and Rebecca's apartment when they founded WeWork. That was their
Wow.
apartment, and it's a commercially zoned space. And so the first Chief Clubhouse was in the same place that I used to spend my like Sunday evenings till 2 or 3 in the morning working on strategy for WeWork, was the same floor in the same building. So I knew right then and there something crazy was going to happen, and hopefully crazy good.
It seems like crazy good from all the traction we're seeing, from all the people that are associating themselves with Chief. And you bring up WeWork. I don't want to spend a ton of the time in this conversation on WeWork because I know you've talked about it a ton elsewhere. But one of the things that we do talk about a lot at Powderkeg is really we've built community around helping companies find their 1,000 true fans, the 1,000 people who are going to follow that company, promote news when they have new news, refer different talent, refer customers, even refer investors as those companies grow and scale. I'm curious if you have one or two takeaways from your experience at WeWork in building community there, being employee one at WeWork, of building your 1,000 true fans there?
Yeah, it's a great question, and yeah, if people want to learn more about the story, I hear there's a couple shows and books about it. I will admit, I have not read one of the books or watched one of the shows yet. So I
That's
like
fair.
it might be totally true. I'm not sure. Um, the Look, I think there were a couple things that we picked up early on at WeWork. One was, you know, building our early community meant providing a safe space, and a comfortable space for people who, you know, were not quite far enough along in their journeys. These early stage companies with early stage founders, they weren't far enough along in their journey to be able to afford to, or have enough people to build their own physical space where they could go and work. So they were stuck in coffee shops or kind of crappy co-working spaces. And that's good. When you're one person with your headphones in and you want to code all day, you could do that, but when you start to take these meetings, you start to want to hire talent, you got to build culture, you need a space of your own. And so the first thing was, how do we scale up the ability for people to look like they are bigger, better, more buttoned up than they were at the stage they were at? And so creating a beautiful space mattered, right? This goes back to the product matters. You can be as helpful as you want, but people aren't going to stick around if the product sucks. So number one is creating a space that was both conducive to them building their companies and their brands, but also conducive to them connecting with others. Because this first problem led into the second, which you realized was, it was a lonely job. Being a founder, you know this. Many of the people listening to this know this. Being a founder is a very lonely, lonely thing. And part of it is that you can hire your first 100 employees and not a single one actually gets what your journey is like. It's not their job. Their job is to do everything but be the founder. And so creating a space that was conducive to founders connecting with other founders went a long way. And people made best friends for life. There have been dozens, if not maybe hundreds of marriages that have come out of WeWork at this point, and thousands of business relationships, right? Well, and at this point, probably millions. But in the early days, in our first 1,000 people, it was thousands of business relationships. People were supporting each other, paying money to each other, hiring each other. And so I think the two things that I would take away are, number one, create a comfortable and safe space, one that works well for your audience. Not every audience needs a WeWork. It's why WeWork, as big as it is today, is not for everyone. I don't work in a WeWork space. It's not my style to work that way with my small team. We have a different vibe than we would get out of WeWork. The number one is creating a comfortable and safe space that works for your audience. And the second is finding those hooks, finding the gaps that those members have of your community is of the utmost importance. And you can only do that by listening to them. And I think that what we did extraordinarily well, and probably not even by design, to be quite honest, is all the walls were glass and all the doors were sliding and they weren't very soundproof. And this was not because we wanted to be cheap. It's not because we wanted people to hear each other talk, but it created a sense of community that went far beyond just the moments that you passed each other in the hallway on the way to the bathroom or the water cooler. By design, you could see when other people were intensely staring at their screen, struggling, frustrated. And so you had all of this context, even though you knew nothing about their business. You knew when that person needed, an extra cup of coffee. You come tap on the glass and, like, I brought you this extra cup of coffee. It looks like you're struggling this morning. That kind of relationship comes because you create those serendipitous experiences. And so creating and solving for the gaps that those people have, it was insanely important.
I think that that makes a ton of sense. And I remember being in New York in the early days of WeWork and being in those spaces, and instantly kind of feeling that it's a vibe. And I know that's like a fuzzy word to use.
Very TikToky. It's a little TikToky. Say it's a
Yeah,
vibe.
exactly. But it is a vibe. I mean, there was a real energy and vibe, and you either quickly got with that vibe, or you're like, I can't stay here. I got to go work somewhere else.
Absolutely. Look, I never used to work in the offices. I'd always sit on a couch somewhere. Like, I didn't want to be in the glass box, but I was in the minority of WeWork members. They loved being there.
You mentioned some of the things earlier about community leading to retention, even lowering customer acquisition costs. Some of these aspects that we've come to know community is just great for building a moat around a business in terms of the brand. Do you think that a company can develop that after the fact? So I'm thinking about Powder Keg in our community of we've just got thousands of B2B SaaS companies that, community may or may not be at the center of their DNA today. Do you see that companies can add community elements later on down the road successfully?
Absolutely. Look, I think we're in an era that is not totally dissimilar from 12 or 13 years ago when social media became a massively important thing for brands, right? For founders, for startups. And people learned, right? They adapted. They weren't necessarily sharing their day to day on Facebook or LinkedIn, right? And then Twitter really created this public fire hose of content and sharing, and YouTube and all these places, now TikTok. And people learned, they adapted, right? They took this on. It was an amazing one-way conversation, right? One brand out to the masses. Those masses could heart or retweet or respond, but really it was brand to the masses. I think part of it is you need to you know, decide to do it and invest in it. It is a channel unlike any other channel you've ever invested in. Because of this flywheel, when you create even a small, you mentioned this, your first 1,000 members, it could be your first 100 members, to be quite honest. If they are obsessed with your brand, they love what you do, you can give them the tools to be an extension of your team. This channel is one that you don't have to pay for, right? Right now, the rising cost of Facebook ads, the rising cost of SEM, the noise on Google. This channel is one that will actually open your emails. They'll open your Slack messages. They'll open your WhatsApp messages, and they'll take action on it. You have to invest in that. You have to choose to put money, time, and effort, just like you choose to invest in social marketing, SEM, creating podcasts and content, whatever that is. The second thing is, unlike a few years ago, there are platforms and resources galore that are the Salesforce of the community era, right? Like Salesforce was for sales and marketing leaders when you wanted to create the perfect CRM, like things like Buddy Media were for social media marketing, right? And how you were going to build that and scale that. Today, we have platforms like Comsor. We have platforms like Hopin, I think you're using for your event. Right now, the it's really interesting. These platforms are only a few years old. They're platforms that are worth $500 million, $1 billion today, which maybe is crazy, but the market has allowed them to do that. But most importantly, they allow you to scale up these problems, these challenges, right? And so you can take one community manager and give them a superpower. You can take two community managers and make them 10 times more efficient and make your members happier. And so I think number one, you got to choose to invest in it. Number two, you got to leverage the tool set that you have available. And at number three, I would say, is what you're doing right now. You need to join and learn these events, right? Like the Powder Keg event. You need to come and be a part of that. You need to see how others do it. Others have done it extraordinarily well. And I don't think there are any companies that won't benefit from leveraging community, but I am certain that the best companies in the world will in the next decade. And so I'm certain that if you don't invest in it today, you're going to be number two or number three in your market. And so I think you invest in that education, you invest in the tooling, you invest in the actual people, and you can absolutely bring that into a business that didn't have it before.
I like that. That sounds hopeful and optimistic, and I'm glad to hear that. It definitely seems.
I'm a glasses half full kind of guy.
I love it. Well, let's talk about that then. Let's dive into the market right now. I mean, you live in the financial capital, arguably, of the world in New York City. A lot of shifts happened recently with the markets. We're seeing valuations for tech companies come way, way down. Talk to me about what you think this means for the next couple months, couple years, even for the tech industry as a whole.
Yeah, like I said, I'm a glasses half full kind of guy. I talked to a founder the other day who I've known for well over a decade, and we took a walk in the park. And after we got done talking for about 10 minutes, he goes, "I, to be honest," he's like, "I've traveled across the country in the last year." He goes, "You're maybe the most optimistic VC I've ever talked to." Um, I, I think I think there's a couple things. The public markets surely are seeing a correction that we've been talking about for the better part of a decade. We've been talking about
Yeah.
the markets are going to correct, right? I think it's happening. I'm not old enough to have been a professional in the last two massive bubble bursts, so I lean a lot on my partners who are a generation ahead of me. Chip and Jeff have been doing this for a long time. Flybridge just crossed over its 20th anniversary. Um, Chip's been investing in VC for 25 plus years. I won't out him on his age or Jeff's, but they're a little older than I am. So a lot of what I get, I learn from my team. I learn from people I trust, right? And I think there are a couple of things that we're seeing right now. And for your audience today, the first one is late stage has surely slowed. It used to be that late stage pre-IPO, Series D, IPO rounds were based on fundamentals, right? They were based on companies performing, growth, 50%, 100% year over year, margin increasing, net revenue retention. In the last few years with SPACs and other things, the markets just got wild. And so companies were going public on almost no revenue. They were going public on no line of sight. And with SPACs, they weren't even having to fulfill the promises they made to the public markets, right? They could just kind of say what they wanted. So there's surely a correction happening at the late stage. The good news for the people that are here, if you're pre-IPO, early stage capital, there's never been more than there is today. Funds out there in the last couple of years have raised so much capital, and we have a period of time we need to invest it. Now, look, we're not sitting around saying, "Oh my God, we need to, invest $150 million tomorrow," or no. We have years to invest it, but the capital is committed. It's committed from long-term institutional partners, and that capital will be invested in who we believe are the best founders, are the biggest market opportunities, have the best moats that they're creating. One of those moats, as I said, happens to be having developed an amazing community. That's really important for us. We think it's pretty defensible over the next couple of years as companies, struggle to maintain market share. And so the early stage capital is there. The first round checks are getting a little larger. Valuations have definitely contracted. I've made 3 or 4 investments in the last quarter, and I mean, I can see it. Like, it's just astonishing. A couple months ago, brand new company pitch deck was raising at 20, 30, 40 million post. Today it's 10, you know, but 10, quite frankly, if you're raising a couple $1,000,000 is super reasonable. Historically, you'd say you're going to sell 20% in every round. That's super reasonable. Is $2 million at 10? It feels right. It feels right. So early stage, the capital will still be there. You need to develop a strong thesis, a strong moat, and be a team that's ready to really live this out for a few years, because it's going to be a rough few years in the middle of this and at the late stage. As you go up from seed through A and B and C, the prices are contracting as well. The checks have gotten bigger. They're just going into fewer companies. The number 2 and number 3 and number 4 in a market are going to have a harder and harder and harder time raising later stage rounds. So how do you create the number 1? You mentioned Chief when it came out. Chief is still the number 1. Chief is growing at such an astonishing rate with control of its capital, profitable in some months. This is very important to be able to control your destiny. And with, a balance sheet that's recently been really padded, they're the far and away leader today. And so if Chief wants to go out and go public in a few years, which could be their plan, they'll have no issue doing it, even when the markets contract the way they have, because when you do it on fundamentals, foundational business models that work, capital's still there. And so my optimism comes from lots of money and checks being written at the earliest stage, pre-seed and seed. We've slowed down a little. It doesn't feel like we have, to be honest. I'm sure we have. The numbers will tell. It lags a quarter behind, but it doesn't feel like we have. Founders who are smart are taking a little bit more money at the early stage, maybe a little bit more dilution, because they want to make sure they can weather the storm, right? They want to go an extra quarter or two without having to worry. I just had a founder this morning text me who couldn't get us into their last round. I've been helping this founder. I think he's brilliant. And he texted me this morning and he said, yeah, he's like, I think I might take an extra $1 million on top of what we just did in our seed. Like, you've been helping me, like, any chance you want to come in. He's not strapped for cash, right? He's being smart about it. He's looking out and saying, what if I need to go an extra 6 months? So yes, public markets crazy, crypto crazy. Long term, I have high hopes for our industry and our market. I can't imagine a world where we don't back another dozen brilliant founders between now and the end of the year, and our network funds back another 2 or 3 dozen founders at the pre-seed. That's not what's happening today, but founders do have to be significantly smarter about how they spend their money, how they raise money, how they hire, and how they retain talent.
Do you think that some of these startups outside of traditional tech hubs like Silicon Valley might have an advantage in some ways over the next few years as they look to hire talent, do the fundamentals of business right, and run in a very capital efficient way?
It's a great question. My partner Anna loves to invest in the Midwest. She grew up out there and sits on her school board out there, and so, or university board, I think. The I think there's a couple things that will give founders who are not necessarily in the coastal sort of tech cities an advantage in this very moment in time. One of them is, with the market correction, the valuation correction, I think that founders in the Midwest traditionally have had to take slightly lower valuations, what I would consider more reasonable, to be quite frank, valuations. And so I think there's a mental shift which the coastal cities are going to need to take, which is going to be like, well, I thought I was going to raise it 20 or 30 or 40 million, and I got to raise it 10. I think if you were already in a much more reasonable market, that becomes significantly easier for you to sort of mentally take on. So I do think there's something there. Now, does that give you an advantage to success? Maybe not. Maybe you still are in as crazy and aggressive of a fight to get the capital. But I think there's a moment where you seem way more reasonable. Something Anna has told me, a lot of founders at the seed stage are pitching fundamentals. They're pitching how their revenue is going to grow and their margin is going to grow and they're going to be able to control their cash flow at the seed stage. Like, that's not common. Usually people are like, look at this chart up here. It's like, I can't even get to it if my camera here. It's, this is where we're going to be tomorrow. So I think that's one thing. The second thing is talent and the great resignation and all of this. Talent is so distributed and so accessible, also in so much demand, but it means that geography has mattered so much less in the last year. From I would say from 2020 to 2021, maybe 2019 to 2021, we shifted from doing like 80% New York, Boston to probably being 80% not New York, Boston, 70% maybe not New York, Boston. Many of those founders have been in the Midwest, in Florida, in Texas. Many of those founders have chosen to move out of the markets where we invested, right? We invested in a company in San Francisco. They moved to New York. Now they're distributed. They're all over. I think they're currently in Palm Springs this weekend as a team. But, so geography has mattered so much less to venture in the last couple of years and to talent, that you're going to have the ability to hire the most amazing people and have them work remote, have them move. Many people are willing to pick up and move today and move to a city or a town that's going to have much better way of life for them. And then the third thing I'll say is that for founders in the Midwest, when you're going out to raise capital, geography, because it's mattered less to the venture ecosystem, you're seeing investors travel the country, right? You can do it on Zoom. You can do what we're doing now. And we raised our fund, the first half of this most recent fund, it was about a 6-month process. The first half we raised entirely on Zoom. We were talking to investors from New York to Los Angeles to the Middle East, and we did it on Zoom, right? And so founders are doing the same thing. If you can show up in person, amazing. I think it gives you a little bit of an edge. But between fundraising, talent, and the valuation shifts, I think there could be an advantage for founders who are not necessarily in the coastal cities.
What do you think talent needs to do in order to make the most of this next period? Is there anything that during this great resignation, great reshuffle, do you think talent needs to be thinking about their moves a little differently?
Maybe. I think right now, if you just raise your hand and you're pretty good, you're going to get a good job offer. Look, there are platforms out there and tools that are helping people be smarter about how they plan their careers, right? Not just their jobs. Chief, I mentioned for female leaders, good example. Go to your community, go to your program at Chief, your core group, and ask for help, right? Ask for introductions to great founders. If you want to be in the startup world, one thing that founders are going to have to do is they're going to have to be much more thoughtful and, quite frankly, judgmental about the companies that they're looking to join. They're going to have to ask questions that employees didn't used to ask, like, how much is on your balance sheet? What was your last valuation? Who's on your board? What have you done to make sure you've cut costs and you've brought spending in line? These are questions that employees don't usually get to ask. I think in this market, they're A, going to have the ability to ask it, and B, they're going to have to ask it, because you don't want to join, as I mentioned, the number 3 or 4 in a category. That company is going to struggle to raise capital. They're going to struggle to maintain talent. And so I think one thing that the talent out there is going to have to do is be a little bit more like investors. They're going to have to ask some of those questions that were maybe less comfortable. And founders are equally going to have to get a little uncomfortable with answering those questions. I can't tell you, in the early days of WeWork, man, people would ask for all the numbers, and we would say to every single one, like, don't worry about it. That's don't worry about it. The balance sheet's so well padded. We had the biggest investors in the world. And it was true at the time. Like, don't worry about it. We have cash. You can't do that today. You need to be a little bit more transparent with your employees. I have one founder who just has all of his books open. Every employee can see what everyone else makes. They can see how much cash the company has, what they're spending, and they can flag it. They can ask a question. Why did our spending go up there this past quarter? And the founder is very transparent and very open to sharing, why.
I love that approach. That's great. Well, last question. While we've got the Powder Keg community here, how can the Powder Keg community help you and what you're building at Flybridge and the community fund?
Yeah, so look, we have a really unique model at Flybridge. In addition to the $150 million in funds that we just raised, we have what we call network funds, and you mentioned the community fund is one of them. We have four groups of operators and founders that we have effectively tapped to be investors. We invest in these funds, we run the back office, we provide mentorship and education, but at the end of the day, these 40 plus people invest in the founders and companies they want to invest in independent of us. That allows us to expand our geography. It allows us to expand the categories that we might be comfortable investing in or know about, and to gain expertise in a way that, we'd have to take decades to learn, right? You've become an expert in what you do over decades. And I'm not going to start from zero today and be able to and speak to the people that as well as you do. And so those vehicles today, the Community Fund, X Factor Ventures invest in female founders, the Graduate Syndicate and Harvard founders, LTV operators invest through a network of executives from sort of unicorns around the globe. And as I mentioned, the Community Fund, which I mentioned who invests, but it's underestimated operators investing in their communities. So Black, Latin, immigrant operators investing in their communities. The number one thing that we have in venture capital, like the 90% of our time, is we can only invest in the founders that we meet. And so I do open office hours to meet founders. I've even invested in people who have reached out cold. Zach from YAA booked my office hours and said, I don't know anybody in venture, but I think I'm onto something. Can you help me? Right. And I wound up investing and leading his pre-seed and his seed round. So we do office hours. We have these network funds, and the purpose of them is to invest far and wide. And so if you're a founder that's building something interesting at the earliest stage, reach out to me, reach out to any one of the network fund partners, reach out to any of my partners at Flybridge. We want to talk. We want to meet. We can only invest in you if we get to meet you. And so we want to meet, we want to chat. The second thing is, over the coming couple of years, these network funds are going to expand. So I want to meet great people who have amazing communities themselves, who have an interest in investing in the future. And let's get to know each other. And there is likely an opportunity to become a partner in the community fund this year or next year, to begin writing checks. We want to help you learn to be an investor, but it's not totally selfless. We want to see the founders that you're seeing. We want to see them before anyone else. We want to see them when they're early enough that we can invest and lead that seed round and get to work with that founder for the next decade. So if you're going to help me in what I do, I want to meet founders. That is my goal at the end of the day. It's where I spend the bulk of my time. And that's what my partners do as well. And so reach out. Like I said, if you go to flybridge.com and you click on my photo, I have open office hours every single week. They're usually booked up a week or two in advance. So go take a spot, send me a deck, let me know what you're working on. But that would be most helpful to me.
I love that call to action. And I want to invite the community to drop a comment in the chat here. If you're watching this live right now, yep. If there's a founder that you think Jesse should talk to, Jesse does an amazing job. I speak from experience here, engaging with the community, wherever that community is, whether it's here on Hop In or it's on Twitter or it's on LinkedIn. It's awesome.
Or even in real life. Even
yeah.
in real life when we get to do
that whole thing too. Yeah. Yeah, even in real life, you've been a traveling machine, man, since I saw you last in Tampa. So
true.
it's been fun seeing you go plug into communities on the ground, literally on the ground. Well, thanks for being here today, man.
Thank you for having me. This was a blast.
Yeah, this is great, man. It's exciting to see the continued investment in community, and I really appreciate you sharing your story and expertise.
Absolutely. Thanks again. Have a great day, everyone.
Jesse, thank you so much. That was amazing. I know two big things I got from there. There's a power in community, and if there's a power in community, that's job security for me, and I'm not complaining about it. Anyway, let's give away 3 Powder Keg Unvalley swag boxes, right? I'm talking 1, 2, 3 different swag boxes going out. Our winners are Tyler Train, Kelsey Vance, and Kyle Haig. You are the winner of Powder Keg Unvalley swag boxes. Let's go. Excited for finish up this afternoon, y'all. Make sure you check out the Powder Keg app. Get plugged into everything we got going on, and we'll talk soon.
Thanks so much, Nate. That was awesome, man. I really appreciate all the great chatter there. Philip, I see your chat. Purple Groundhog, thanks for tuning in. We've got a bunch of great sessions happening now. That session went a little long. I'm so glad it did because Jesse really brought the goods. But right now, live, we've got sessions on SaaS marketing trends. And then we also have a session on remote first or hybrid work. And then we can have some roundtables too. I think those are going on right now as well. So if those sound interesting to you, or you are an engineer, there's an engineering roundtable live, and there's also open advice and networking from our career advisors. So if you're in, hop into those sessions, and I'll see you there. Thanks, everyone.